last month, the City of Toronto's council approved new tools to deal with the city's budget pressures, and that includes increasing the municipal land transfer tax, which would mean starting January 1st, homes valued at more than $3 million can be taxed as high as 7.5%. Now, before that, homes valued at more than $2.5 million were subject to a 2.5% tax. That difference could translate into millions of dollars in extra cash for the city. However, some are concerned about what the increase could do for housing affordability. Let's bring in John Pasalis, president and broker of Realosophy Realty, for more on this. John, what do we know about how this all came about? Again, the idea that a city needs to find ways to create more money to run the city, and then they've looked to this as an option?
Yeah, absolutely. And what the one downside to this is, I mean, they have a vehicle that they could use to raise taxes. I mean, raising property taxes, certainly. And I think that would have been probably a better step to take, spreading this across a number of households and all the households in the city of Toronto. But they decided to lean on sort of a luxury, I think they call it a mansion tax instead.
And I guess, you know, people will say, well, yeah, certainly a $3 million home is a very nice home compared to some accommodations. Is it a mansion in what has been one of the hottest housing markets in the country for a very long period of time?
I mean, remarkably, a $3 million home is not a mansion in Toronto. I mean, and the challenge is, you know, taxes like this really clog up sort of starter homes. I mean, anyone upsizing to a $3 million home needs to usually sell their, you know, more affordable starter home. So when you make it harder for people to upsize, it makes it harder for sort of free up that inventory for starter homes.
So this could create a supply issue in a market where that has already been an issue, having enough supply of housing.
Yeah, absolutely, and that's the challenge. It's going to tighten up the supply. It's going to make it harder for people to upsize. I mean, if they wanted to sort of tax higher-end homes, I mean, again, probably would have been better to have a slightly higher property tax rate on luxury homes rather than a land transfer tax, which makes it harder and obviously is a disincentive for people to upsize.
What are some of the differences between those two, just for those who aren't familiar?
Yeah, so I mean, so when you're taxed on a land transfer tax, I mean, whether it's 4 or 5% of the value of the home, that's a significant amount of money that anyone upsizing has to pay up front. And this is part of their calculations, whether they can even afford to upsize. Whereas if the city had introduced a slightly higher property tax rate, you know, this is a tax that is paid annually by the homeowner. It's usually significantly lower. You know, it's spread out over a longer period of time, and probably would have been a better measure.
And I guess on that issue of affordability, one of the complicating factors beyond what we're looking at for taxes and those kind of considerations is with this higher interest rate environment, financing costs obviously have gone up significantly. Has any of the weakness in the prices of homes themselves, given the higher interest rates and the cooling effect that has that offset the higher price that you have to pay for everything that goes into owning a home, including the debt you have to take on?
Yeah, slightly, a little bit. So we've actually seen prices come off. I mean, they sort of, the most recent peak was in around May of this year. And we're basically down about 10% from that. So any growth we saw in 2023 in the first half has kind of been wiped out. So prices have eased. The challenge is it's not enough to account for higher rates. I mean, higher rates today, fixed rates are more than 100 basis points higher than they were in the spring, which is weighing on affordability right now. And
how does that impact supply as well? You know, you talked about with land transfer taxes, if ultimately, it sounded like you said if there's less mobility, then there's less supply. What's happening with mobility in a market like this with these higher interest rates?
I mean, again, what's happening is people just can't really move, you know. I mean, detached home sales were basically at a record low, I mean, going back to the mid-1990s. So what we're going to see is it's going to be harder for people to move, harder for people to upsize. And that's going to kind of obviously freeze the market a little bit as we move towards the end of the year.
What have been some of the measures that have helped to address this issue of affordability in a meaningful way? I mean, certainly housing is something that requires some thought at a municipal level, at a provincial level, and at a federal level. And certainly even we've heard from the federal government recently about some initiatives to try and encourage more building, rebates, for example, on some of the GST associated with that. How does that ultimately help the affordability story?
So, I mean, the GST is a great initiative that the federal government is looking to waiving that on purpose-built rentals. And certainly if the province does that as well, that would be great. It's probably not going to have a huge impact on affordability. I mean, what's probably going to do is lead more developers to sort of, shelve their planned condo projects and build purpose-built rentals instead. So it should hopefully contribute to a little bit more supply during a period when investors aren't buying. Builders can basically build purpose-built rental instead.
The other factor for Canada's economy, and we just highlighted the IMF expectations for next year, we're expected to grow more than the U.S., but obviously we've seen a population surge as well. How does that factor into this story on affordability? Obviously, there's the growth of the economy. That is a check mark, but for many new Canadians, that affordability challenge is something they face right when they get here.
Yeah, I mean, absolutely. I mean, our country's growing now by over 1 million people per year. We're only building 200,000 homes per year. And really, it's just a function of, it's not very complicated. I mean, we're not building enough homes for everyone moving here. So that's going to kind of drive up housing costs for rentals, driving up housing costs for home ownership. Not immediately, because right now the biggest factor is interest rates, and that's going to put downward pressure on probably houses. But over the medium term, we're going to probably see the weight and the pressure of our booming population on pricing.
Okay, John.